Welcome to your home buying journey to closed. Thank you for dedicating your time to learning more about purchasing your first home and for entrusting me with imparting this knowledge. We have a lot to cover today, so let's get started. Just a little bit about me before we dive into the course material. I'm originally from New Orleans. I left in 2002, moving to South Florida, and then to the Atlanta area in 2004. My husband and I purchased our home in Swanee in 2010. My background is in corporate America. Prior to focusing full-time on real estate, I had a 20-year career in human resources. The last few years of my career, I became interested in real estate investing, which led me to pursue becoming an agent. I've been licensed since 2020. In my first full year of real estate, I closed 22 transactions equating to over $7 million in volume. Just as in my corporate career, I consistently demonstrate an ability to achieve desired results and exceed expectations. In today's session, we will walk through the 10 steps of the home buying process, where I will provide explanations of the critical pieces of the purchasing puzzle, as well as identify potential derailers that can result in your not closing on your dream home. When deciding on who should represent you in your real estate transaction, it's important to not just focus on how much real estate someone has sold in the past. That's not exactly the best or only indicator of how well they tend to their clients or how efficiently they manage the process. Your real estate professional should also be a good match for your personality. Pay close attention to how responsive they are and how they respond to your questions. Do your research and read up on their recent reviews of their work, and check their online presence as well. Now, when identifying your lending partner, it's not just about who can give you the lowest rate. You're encouraged to apply for pre-approval with a handful of lenders, not only to identify who can give you the best rate, but also the best terms. As long as the applications are happening within a 30 to 45-day period, they will count as one hard inquiry on your credit report. Some questions to ask your lender are, how much are the closing costs? This alone can prevent you from being able to purchase a home. Can they close in less than the standard 30 days? Can they get you a conditional approval and appraisal in 7 to 14 days as opposed to 21? But also consider how responsive they are. Can you connect with someone on the weekends or after standard working hours? In a tough market, these factors can make a huge difference in getting you to the closing table on time and your offer standing out amongst others. Next, we will talk about some common loan options. There are several ways to purchase a home, but these are the most common. Most first-time home buyers are drawn to FHA loans. The low down payment and more lenient credit score requirements are attractive to many first-time home buyers. It's important to note that while you may be able to technically qualify for an FHA mortgage with a credit score below 600, it may be a challenge finding a lender that will approve you, as every lender has their own requirements. Something I like to caution FHA buyers on are that some condo and townhome communities aren't eligible for FHA financing. Additionally, if a home was flipped, it cannot be purchased with an FHA loan for another 90 days from the recording date of that last sale. These two factors take some homes out of contention. Also of note is the upfront private mortgage insurance fee and monthly private mortgage insurance that is typically required for the life of the loan. This adds to your closing costs and your monthly note. Seen as a benefit to buyers, the FHA loan has an appraisal inspection requirement that deems the home must meet strict safety, security, and code restrictions, as well as essentially being in move-in ready condition. This makes fixer-uppers out of the question. VA loans are for qualifying service members and their family. The credit score and debt-to-income ratio eligibility requirements tend to be a bit more lenient, and VA loans also have the strict safety, security, and code restrictions on the appraisal inspection requirement. USDA loans are for homes in rural areas. And lastly, we have conventional loans. Most lenders require a credit score above 620 and a debt-to-income ratio below 43%. If you put down 20% or more, there is no private mortgage insurance. Additionally, your appraisal may get waived with the larger down payment. Ultimately, the lender will advise you on what loan type you qualify for based on your credit and debt-to-income ratios. The higher your credit score and lower your debt-to-income ratio, the lower your interest rate, resulting in a lower payment. Once you've begun the lending process, you may hear the terms pre-qualification and pre-approval. Sometimes they are used interchangeably, but they are not the same. With the pre-qualification, it's usually instantaneous. You enter some info online and they spit out a pre-qual letter. They haven't verified any of the data that you provide. With the pre-approval, the information is actually verified with a request for specific documents like check stubs, bank statements, W-2s, tax returns, etc. This will also provide you your interest rate and give you an idea of your closing costs. In today's market, no one is considering offers without a pre-approval. If your lender provides this final option, full underwriting, I highly recommend it. This will allow you to close sooner than most and eliminates the potential hiccups that tend to arise at the last minute, as all of the work of verifying your creditworthiness is done before you offer on a home. This step would usually take place at the end of the process. Now, once you have your budget, you need to identify what you're looking for in a home. So make a list of your wants and needs and determine your must-haves or deal breakers. Think about how long you intend to stay in the home. Is there a particular location, school district, floor plan, architectural style, lot size, parking setup, whatever it is? Communicate this to your realtor so that you aren't being shown homes that you won't consider. Taking the time to identify your needs cuts down on the time it takes to find a home. Now, mind you, if you're very particular about what you want, it will limit your options. I encourage you to be open-minded and look past the minor things like wall color, carpet, etc. Those can be easily addressed. Make sure that you and your partner or significant other are on the same page with your final list. This can be a huge derailer to the process. I encourage you to conduct online searches of homes in your desired price point to see what your budget realistically affords, and I encourage you to do this before you start your formal search with an agent. Now we're to the fun part. Your agent will likely send you listings to view. Of those selections, you'll identify which ones you'd like to tour. Your agent has to submit requests to view the homes with the listing agents, and they will typically prefer to schedule more than one tour at a time and have those focused in a specific geographic area. Once the showing requests are approved, you'll meet with your agent at each listing where they will guide you through the home. Be sure that all parties making the decision are present for the tour. Second tours may not be an option in a fast-moving market. Following your tours, you should regroup to discuss what you liked or disliked about the showings, and if you'd like to make an offer. You're encouraged to take pictures and write notes about each home you see. The more homes you see, the more likely you'll forget some of the details. Now, it's a 50-50 shot whether you'll find your dream home on your first tour. It largely depends on how thorough you've been when communicating your house needs and if your agent was listening. Now, if you've toured a home and would like to submit an offer, you'll discuss the terms of your offer and your agent will draft the contract for your review and signature. It is then submitted to the listing agent for consideration. Your agent will typically set a deadline for the seller to respond. If the agent doesn't respond, it means your offer wasn't accepted. Now, the agent can either reject, accept, or counter your offer with a specific request, which would spark a negotiation. Now, when drafting an offer, there are several factors or terms to consider. It's not just about price. In the next few slides, We will discuss the different pieces of the purchase puzzle. Now, once your offer is accepted, you'll pay a deposit. Is it required? No. Is it expected? Yes. It shows the seller that you're serious about purchasing their home. It's typically 1% of the sales price, but can really be for any amount. You'll submit this payment to either the closing attorney or your agent's brokerage to be held in an escrow account until closing day. This money will ultimately be applied to your down payment and closing costs. Should you walk away from the contract, it is refundable, but only under certain conditions. If you fail to meet certain contract stipulations, your earnest money is subject to forfeit. And we will discuss this in greater detail in the coming sections. Due diligence is essentially a set period of time where the buyer has the right to change their mind for any reason and receive their earnest money back. It's traditionally been 7 days, but can be as little as 1 or as many as 10. It also can be waived altogether. Inspections typically happen during this time. There are several types of inspections that may be relevant for the home you're purchasing, from a general inspection to radon, termite, septic, etc. They can range in price from $350 to upwards of $1,000. This is an out-of-pocket cost from the buyer paid directly to the inspector. Your agent will generally provide you references from which you can choose. Now, following an inspection, the buyer can request the seller make certain repairs that have been identified during the due diligence period. It's important to note, all houses are sold as is. The seller has no obligation to make or pay for any repairs. If you're unable to come to an agreement on required repairs, the buyer is able to walk away from the contract and receive your earnest money back as long as it's done before the end of the due diligence period. An appraisal is also an inspection that provides a professional opinion on a home's value. It's extremely important because a lender will not loan more than the appraisal amount. It typically costs around $500. In most cases, you'll pay this at the closing table as a part of your closing costs, but sometimes it can be required prior. A certified appraiser assesses the condition, size, neighborhood, features, and recent relevant sales to determine the home's value. If the home appraises for less than the offer price, the buyer has to negotiate with the seller to either lower the sales price, pay the difference in cash, or meet in the middle. Sometimes an appraisal can identify conditions. These are repairs that are required in order for the loan to close. This will generally happen if there is a livability, safety, or security concern. A set period of time is indicated for an appraisal contingency to facilitate this process. It's typically 21 days, but can be as little as a week. If the appraisal contingency is not met, you could lose your earnest money. If you're purchasing your home with financing, you'll typically want to have a financing contingency. This expresses to the seller that your home purchase is contingent upon receiving financing. It's a set period of time for the lender to confirm your creditworthiness and provide a conditional approval. It's traditionally been 30 days, but it can be as little as a week. If you are unable to get approved for a loan during this period, your earnest money can be refunded. If it's determined that you cannot get approved for a loan after the financing contingency has passed, you will lose your earnest money. Now, 3 days before closing, you're required by law to sign your closing disclosure, or CD. This document will list all of the fees associated with the transaction, which I've listed here. It will also list out any fees the seller or lender has agreed to pay. The total will be an estimate, as some fees are still being calculated until the day of closing. You should roughly expect around 3% in closing costs. Now, these funds should be wired to the attorney in advance of closing, and if you overpay, you'll receive a refund check at the closing table. We finally made it to closing day. Now, the closing process typically doesn't take very long at all. Usually, both parties meet with the closing attorney and sign the documents to transfer the deed and fund the sale. Once all are signed, the attorney verifies funding for the purchase. This part takes the longest. If the buyers or lenders' wired funds haven't hit the relevant accounts yet, there could be an extended delay. If funds haven't hit by close of business day, the house will close in escrow. The buyer will not receive the keys until these funds clear. Once the funds clear, each party receives copies of the relevant documents and the buyer gets the keys. There are several potential hiccups that can occur anytime throughout the purchase process that can either delay your close or prevent you from closing altogether. When you're having the inspection completed during the due diligence period or during the appraisal inspection, there may be major repairs that are uncovered. Remember, the seller does not have to agree to fix anything. If you're unable to come to an agreement on repairs, or the required repairs are too significant for you to stomach, this could result in your walking away from the contract. If the appraisal comes in lower than your offer price, and the seller is unwilling to lower the price and you're unwilling or unable to pay the difference in cash, this will result in your having to walk away from the contract. If you have late payments, max out credit cards, or open new credit accounts, it changes your creditworthiness. If you change jobs, it creates risk. The lender may not approve you to purchase. The closing attorney is conducting a search to make sure the title on your new home has changed hands legally in the past and there are no liens on the property. If there are clouds on the title, as they're called, it may require additional time to get resolved. Now, we've already discussed earnest money and closing costs, but it's important to point out that once you are given your clear to close and apprised of the monies due at the closing table, you're expected to wire those funds by the day of closing. No exceptions. If you don't have the funds, you don't get to close. Most lenders and agents will verify your financial position before even starting your search to prevent this problem. And lastly, we have lender delays. This could be the appraisal not coming back timely, or the lender is unable to provide conditional approval timely, or underwriting takes longer than expected. These delays can result in you missing critical contingencies and losing your earnest money. So whenever the lender requests documentation from you, submit it immediately. Congratulations! You successfully completed your home buying journey to closed. You are now ready to take on the home buying process. When you're ready to purchase, contact me to get started. In the interim, follow me on social media platforms at Harris Homes Sale. Thank you for your attention. I'm Allyson Harris, real estate professional. Have a great day.